Good morning. It is 6:20 a.m. on August 28th, Friday. Here's your financial update. So if you don't know about the Winklevoss twins, let me give you a little spiel. These guys helped build Facebook with Mark Zuckerberg. Mark was not the only one who built it. He built it with his buddies in his dorm in college, supposedly. That's the story. These guys were given basically a minimal to no cut at all for what Mark supposedly built all on his own. These guys helped him for sure. They sued him for like $65 million like 15 years ago or whenever it was, a long time ago. And they made that money. And since then, they have been really all in on cryptocurrencies. They own Gemini, which is the other Coinbase.com, if you will. Coinbase is, as far as I know, one of the only fiat gateways to crypto, meaning, debit card or checking account to Bitcoin. If you go to Binance, for example, it's a great market. They've got like just about every coin you could possibly want to invest in, but you cannot, at least from the United States, you cannot plug a credit card in there directly. You've got to go to a place like Coinbase to get Bitcoin or something else first, and then send that over to Binance. But the fiat gateway is, directly from your checking account. It's, it's like the only place you can go if you want to use a checking account, basically. And they own Gemini. And apparently they are incredibly bullish on crypto. The Winklevoss brothers say Bitcoin could reach $500,000 as the only long-term inflation hedge. And I get that. So Tyler and Cameron Winklevoss, noted internet entrepreneurs and crypto billionaires, believe weakness in the U.S. financial system and other factors mean Bitcoin can one day reach $500,000 per coin. I do think it's possible. I don't think it's going to happen tomorrow or this year, but I do think it is possible. In a post on the Winklevoss Capital blog Thursday, the two set out how, while historically strong, there are now fundamental problems with gold, oil, and the US dollar as stores of value. I mean, the only problem with gold, folks, is that you have to buy it and hold it yourself. The twins point to government money printing in the trillions, right? That's $7 trillion so far this year, agreed, and borrowing between government departments as the Fed Reserve buys billions in the debt from the Treasury as factors that will ultimately lead to inflation. Even before C-19 and despite the longest bull run in U.S. economic history, the government was spending money like a drunken sailor, cutting taxes like Crazy Eddie, and printing money like a banana republic. Further, the arrival of the C-19 epidemic is also expected to raise the U.S. debt to GDP ratio more this year than over the last 10 years. Notice how I didn't say the word. I'm trying not to because apparently YouTube picks that up and will drop your videos. You're not supposed to talk about it. And I do want people to hear this news. The available solutions to this debt, a soft default, austerity, or hard default, are not pretty, according to the Post, and would all further bring inflationary pressure on other problems. While C-19 has hurled us further down the path towards a soft default, the greater culprit is the U.S. government's permanent and unapologetic policy shift towards a debt monetization model to finance its operations, the brothers claim. Moving on, the Post addresses that both oil and gold have issues too. Oil suffers from the fact that there is more supply than had been realized with the advent of fracking, while C-19 has made it clear that the industry is vulnerable to demand shocks. Demand will also suffer from pressures to move away from carbon-based energy to more environmentally friendly alternatives, they predict. Just like in California, where basically people are having rolling blackouts because green energy might be cute, it might be clean, but it sucks. It's terrible. It's weak. And gold, the Winklevoss argument goes that while currently a reliable store of value and the classic inflation hedge, commercial asteroid mining threatens that status in the future. Hold up, we're not there yet, okay? We're not there yet. That's true, and I never thought about that, but we're not there yet. More prosaically, the precious metal also suffers from being notoriously difficult to transport, especially during a C-19 type of situation. Bitcoin, aka native internet money, fixes such issues, they argue. Bitcoin is not just a scarce commodity, it's the only known commodity in the universe that has a deterministic and fixed supply. This means the cryptocurrency is not prone to supply shocks that gold or other commodities might face. With other advantages like ease of portability and strong security, Bitcoin is 10 times better at being gold than gold. Since inception, Bitcoin has advanced rapidly into gold's territory, and if the current trajectory continues, the bull case scenario for Bitcoin is that it is undervalued by a multiple of 45. This could mean a Bitcoin price in the region of $500,000 per unit, they say, though no time frame is provided. Going further, the Winklevoss brothers suggest a $600,000 price is possible if Bitcoin should replace some of the $11.7 trillion in government's foreign exchange reserves. Bitcoin is ultimately the only long-term protection against inflation. They write the cryptocurrency is trading at around 11,430 at press time. Okay, so they're incredibly bullish. I definitely agree with just about every one of their points. Another thing that I would say is this 11 point trillion in government's foreign exchange reserves. The world governments are carrying a lot of U.S. dollars, but they would love to get off of it. And do I see them going to China's currency? Probably not, as it's highly manipulated. So they'll probably opt for something like Bitcoin. But they do want to get off the U.S. dollar, and nations, especially adversarial nations to the U.S., have been trying to figure out ways to bypass it. So keep your eye on that. All right, in stock news, Forbes. This is an incredibly bullish article for stocks. I'm not sure I agree, but let's see what they have to say. Stock market crash. Here is why we are in a Goldilocks scenario for stocks. Is this a V, U, L, or W-shaped economic recovery? These are the questions that stock traders have been asking since the C19 stock market crash. There is no doubt that the stock market has been experiencing a V-shaped recovery during this period. There have been significant concerns that the tech-led C19 stock market rally could fall flat on its face. However, the Federal Reserve in the U.S. made it clear yesterday that it isn't backing out anytime soon. Moreover, interest rates are likely to stay lower for longer under the new monetary policy framework. Are stocks going up or down? The S&P 500 is up 7.58% year-to-date. The NASDAQ index has advanced 36.56 year-to-date, and the Dow Industrial average is down 0.16 year-to-date. The S&P 500 hit another all-time high yesterday, and the Dow Jones Index briefly erased its losses for this year. Looking at the U.S. stock indices, it's evident that the current stock market rally, which many have called a bubble, has been led by the NASDAQ index. It was the NASDAQ index that first erased its yearly losses and started to post record highs. The S&P 500 index followed the NASDAQ index and dug itself out of yearly losses. Speculators have started to say that this market isn't going to crash because the S&P 500 is a better representation of a wider U.S. stock market. The recovery in the S&P 500 index is evidence that the stock market rally has gained more strength, and within just a few months we have witnessed the S&P 500 breaking out of its pre-19 record high. The S&P 500 has recorded several record highs this week, and technical analysts believe that the next bull cycle after the S&P 500 broke its C19 record high could push the index higher by at least another 40%. My goodness. This means that the index would go beyond 4,000. Yesterday, the S&P 500 index closed at 3484. The S&P 500 chart below shows a green line, which illustrates the retracement from the pre-19 high to the C19 stock market crash. The purple line is the projection of the previous cycle. The Dow Jones Industrial Average was briefly positive yesterday when the Federal Reserve announced its monetary policy framework. Yeah, of course. Stock investors have been asking themselves whether stocks will rise further past their pre-19 record level. The other question is, what will it take to convince traders that the current rally is not a bubble but an actual bull run? Yesterday, we got our answer to both questions. The Federal Reserve's new monetary policy framework. The answer has been out front all along. The Fed is supporting this market rally. Of course, if anyone has forgot the famous saying, do not fight the Fed, then yesterday was another clear reminder. The Fed this is what I was talking about yesterday. Get ready. The Fed has changed its monetary policy framework, and now it is going to target an average of 2% inflation instead of a peak of 2% inflation. So that means 4% inflation will be the peak if that's the average, right? This means that interest rates will stay lower for longer, and the Fed is comfortable in allowing the economy to run a little hotter, meaning both inflation and employment could overshoot their targets. But how can we keep a situation like that up forever without a major crash? That sounds so dubious. The Fed has been considering altering its monetary policy for a while, but the C19 pandemic triggered this initiative. The U.S. stock market is really in a Goldilocks scenario now because if economic data is weaker than anticipated. Then stock traders will assume that the Fed will remain accommodating. If the Fed keeps its monetary policy stance dovish, the stock market is likely to rally. I've never heard that word. So bad news comes before good news, and the U.S. stocks may continue to rally. So bad news becomes good news. On the other hand, if the economic numbers begin to improve substantially, investors aren't likely to panic. The assumption will be that the Fed is happy to allow the economy to run hotter because its average inflation target is 2%. Under this scenario, the stock market may continue to move higher. If this is a bubble, then could the upcoming potential rally inflate this bubble even further? The reality is that we need to see things from the Fed's perspective. The Fed made it clear yesterday that it will take a long time for a full recovery to take place, and millions of Americans who are out of jobs aren't likely to get their jobs back overnight. The recovery will take some time, which means the Fed will have to do everything possible to help the economy. We learned one thing from the previous cries, which is that there's no point in fighting the Fed. The Fed's new monetary policy framework motivated U.S. stocks to move higher. In addition, we are still waiting for another C-19 aid package from Washington. This stock market rally has been running hot, and now it has shifted into a higher gear, meaning we could see new record highs for the U.S. stock indices. So this is a very bullish article on stocks. I don't know if I agree with him, but it's nice to have some white pills in this. In gold news, gold and silver seem strong price rebounds on inflation trade. Gold and silver prices are trading sharply higher in the U.S. trading Friday following a wild session Thursday in which the yellow metals price was up over 30 at one point and down over 25 at another. It appears metal traders to end this week are focusing on the bullish aspects of the inflation trade that has been reignited following Fed Chairman Jerome Powell's very dovish speech on U.S. monetary policy delivered Thursday morning. So everything we're seeing is having to do with that, guys. Like crypto, gold, stocks, all of that is being predicated and being based upon what the Fed is doing. October gold futures were up 37.50 an ounce at 1962.50. September COMEX silver prices were last up 74 cents at 27.765 an ounce. Global stock markets were mixed overnight. The U.S. stock indexes are also pointed toward mixed, weaker openings when the New York day session begins. U.S. stock indexes have had a very good week, with the NASDAQ and S&P 500 hitting record highs and are on track for the best week in 2 months. The marketplace is still digesting Powell's speech on Thursday, in which he outlined the U.S. Central Bank's new strategy to loosen its inflation guidelines and focus more on fuller employment. Most market watchers now reckon U.S. interest rates will remain low for a very long time. The shift in Fed policy will most likely reignite the inflation trade, which has been historically bullish for hard assets like raw commodities. In recent years, the prospects for very low inflation and even deflation had muzzled many commodity market prices. The Japanese yen appreciated versus the greenback Friday on news that Japanese Prime Minister Abe is resigning due to health reasons. Oh no, we like that guy. The U.S. Republican convention ended Thursday with the marketplace paying little attention to the event this week. European shares were weaker Friday as COVID-19 cases are on the rise again in much of Europe. Whatever. And I said it, damn it. The important outside markets today see NYMEX crude oil prices near steady and trading around $43 a barrel. Hurricane Laura lashed Texas and Louisiana and shut in much of the U.S. Gulf Coast oil and gas stations. That pushed gasoline futures prices to a 5-month high this week. The U.S. dollar index lower and back near its recent 2-year low. The yield on the U.S. Treasury 10-year note is trading around 0.75 today. Bond yields have risen this week amid better trader and investor risk attitudes and some recent better-than-expected U.S. economic data. U.S. economic data due for release Friday includes personal income and outlays, advanced economic indicators, the ISM Chicago Business Survey, and the University of Michigan Consumer Sentiment Survey. Technically, the gold bulls still have the firm overall near-term technical advantage amid recent choppy trading. Prices are still in an uptrend on the daily bar chart. Bulls' next upside price objective is to produce a close in October futures above solid resistance at 2,000. Bears' next near-term downside price objective is pushing futures price below solid technical support at 1,900. Yada yada yada. First resistance is seen at this week's high of 1978.50, and then at 2,000. First support is seen at the overnight low of 1921.20, and then at this week's low of 1901.40. Wyckoff's market rating 7.5. September silver future bulls have this solid overall near-term technical advantage. A bullish symmetrical triangle pattern has formed on the daily bar chart. Prices are still in the overall price uptrend on the daily bar chart. Silver bulls' next upside price objective is closing prices above solid technical resistance at the August high of 29.915 an ounce. The next downside price objective for the bears is closing prices below solid support at the August low of 23.58. I don't think silver is going to drop at $23. That's probably not going to happen in the next 3 days. When August ends, first resistance is seen at this week's highs of $28.35 and then at $26.05. Next support is seen at the overnight low of $26.89 and then at $26 and almost 10 cents. Wyckoff's market rating 7.5. And then if we look at gold prices and refresh, it's all in the green. Gold is up almost 2%. Silver is definitely up almost 2%. And it's still trading very well. Silver has not seen the level of volatility that gold has seen, in my opinion. I think both are definitely must-haves right now. You know my opinion on this. Let's take a look at crypto market currencies. A little bit of a mixed, some in the red, some in the green, but all in all, nothing too major here. I mean, Bitcoin is still holding well above 11,000. Ethereum is near 400 again. XRP has taken somewhat of a hit the last few days, down to 26 cents. Chainlink is still the number 5 coin according to this website. It's doing okay. Anything crazy happening here? Neo, which we don't hear much about, is up almost 6% as of right now. I don't know anything about these, but I bet there's some kind of DeFi coins. They're up 20 and 34% respectively. Yeah. But I mean, it'll be interesting to see where crypto goes now with that inflation announcement. Anyway, that's going to be the update for this morning. Tomorrow I'll get at you with something fun, and then I'll see you again on Monday. Take care.